Hello everyone, this is your premium post-market report for the E-mini S&P 500 for Monday, September 30th. The ES had a very quiet range of trading today. We basically only had a 7-point RTH range. We had 15.5 points for the entire session, including pre-market and overnight trading, but basically most of that move happened before the RTH open. Only 7 points today, and 1687 held throughout the session, as did 1680 on the bottom. We have a very tightly coiled range here from the RTH session that really indicates that Monday we could see a potentially explosive breakout opportunity that leads to a trending opportunity throughout the week. As a matter of fact, if you look at a 60-minute chart here, you actually see that prices have dropped away from that 1725 high, actually 1726.75. That was Fed Day. We got a big Fed Day rally here. The next day we kind of pushed up into that area, and ever since we've come down from that zone. And the last time we tested 1700 twice over the span of 2 days earlier in the week, they both rejected, and we are now hitting the lows at 1680 for the week. 1680 caught bids immediately, pushed price back into the range, and this could be very significant heading into the next week, because if you look at the last 4 days of range, very narrow compared to average. You would typically expect that after the big range of movement we had in the prior week, but now compression could lead to major expansion in the upcoming day and the upcoming week. If you look at a daily chart, let's take a look at average daily range calculations here. Basically, for the average daily range, you can actually see right here that a 4-day average daily range, or a 4-day MDR, multiple day range, 34.5. That's what it's averaging. And the last 4 days only had a total range of 21 points. That's almost a third less than average, which means we could be seeing a major breakout opportunity ahead. Anytime you have current daily range that is significantly smaller than average, you usually see breakout opportunities. So watch out for a potential breakout next week that could lead to a major move in the direction of the break. Now, if we look at a general trending template here, you can see that prices have rallied nicely from 1625 up to 1725, a 100 handle rally. Typically speaking, you would see a pullback from that zone, higher low form, and then a push to new highs. Right now, 1680 held very nicely. That was also a gap fill. Program bias came right in. This could literally be the low as we break back above 1700 and rally to new highs. As a matter of fact, right now, just doing a basic measured move measurement here from the recent low up to that recent swing high, you can then put this measurement from Friday's low of 1680, and that gives you a measured move up here at 1788. So we could be looking at a rather explosive move ahead if this is indeed the higher low. Now, of course, this is not sealed yet. You have to have confirmation above 1700. We got to see how price opens up next week. But for right now, we've remained extremely bullish. We continue to see buyers come in and defend those dips, which is leading to continued overall strength. We take out 1680s, then we have 1675 below, and also 1668 as key support down below. So watch these zones very closely. But right now, this 4-day range, very important. I would say 1700 to 1702 on the top side, and then of course you got 1680 on the downside to see how this thing resolves itself heading into next week. That's all for right now. That's the Premium ES report for September 30th, 2013.